In this video, I'm going to teach you guys how to use the best time frames. Not only am I going to show you how to use the time frames, I am going to show you guys how to get sniper entries with these time frames. If you have seen on my Instagram, I get one of the best entries in the market all the time, consistently, and I keep posting it. And I get so many questions saying, how do I get these sniper entries just like me? So I have made a video entirely about time frames, as they are so important when it comes to getting sniper entries, so you can scale in into the 5 to 15 minute time frames, and then you can scale out and project yourself on the 4-hour time frame and get yourself targets, or the 1-hour time frame. So if you haven't already, make sure you go like the video, subscribe if you haven't already, and let's get right into this. So today we're going to be looking at time frames. Time frames is really important, traders, okay? Because time frames is what's going to show us what the market is giving to us, okay? Now, if you don't understand time frames, unfortunately, you will never be able to understand how to analyze the market, and you'd always miss out on around 30 to 40 pips, which could take your trading account to the next level, okay? So what we're going to do is I'm going to explain to you which each time frame is, and how you use it and when you use it. And by the end of this video, you will also learn how to get sniper entries. I'm going to show you 2 to 3, I don't know how many trades breakdowns I'm going to show you, but I'm going to show you how to use each time frame and how to get really good entries. Okay, so let's get right into it. So the day time frame. So before I get right into it, let me just show you exactly what time frames I use. So I use a 5 minutes, 15 minutes, 1 hour, 4 hours, and a day time frame. Now, these are the time frames I use. I do sometimes use, the 45 minutes, the 2 hours as well. But most of the time, I am using the day, 4 hours, 1 hour, 50 minutes, and 5 minutes. I'm going to explain to you which one's my favorite. And I'm also going to explain to you which time frames we use. So, when I first look into the market, the first time frame I'm using is the day time frame. The reason why I'm using the day time frame is because this is what tells me what's going on in the market. Okay, I'm a day trader. I need to know what's going to happen throughout the weeks or throughout the days that's going to be ahead of us, right? I need to know what happened in the past few days. I need to understand what's going to happen or forecast what's going to happen in the next few days. I need to find out my areas which I should enter. And after all of that, I look at the day time frame, okay? The day time frame will tell me what the trend is and key levels or key candlestick formations that will help me trade. Okay, so for example, on the day time frame, we see 1, 2, 3, 4, 5, 6, 7 downwards pushing bearish candlesticks, right? We see 7 bearish candlesticks, 2 bullish candlesticks, but this bullish candlestick is an inverted hammer. And what does that mean? We're going to be going down, right? What happens? Price then goes down, creates a doji. What happens when we have a doji? Okay, price is going to go up. We don't know where it's going to go up, but we know price is going to go up, and price did exactly that. Okay, now the 4 hours also does the exact same. It kind of scales in a little bit more, makes it a little bit more structured. This is where the 4 hour time frame normally is where I draw my key levels. So if I just remove all the drawings quickly, for me personally, I'll look at the level of support that I see. So for example, over here, level support is 1.04500. Okay, so let's just draw that in. Then we have 1.05, which I'm just going to do every 50 pips, okay, guys? And then so after 0.5 will be 1.055, which is, let's see over here, this is 1.06 actually. Let's go for 1.06, okay? So we did 50 pips over here because we see price gone up, retested and gone up. And then we have, 100 pips over here. Okay, that's exactly what I'll do. Now, let's just go back and see what I'll do next. What I'll do next is the 1 hour time frame. 1 hour time frame is actually the most important time frame that I use, and this is because the 1 hour time frame, if I'm trading, I look at the daily time frame and the 4 hour time frames to find the areas, my key levels, find the trend. We're going on a downtrend, simple, okay? The 1 hour gives me a better opportunity to actually understand the market and seeing structure. For example, I can see head and shoulders, I can see a retracement, I can see a moving average crossover. There's so many different things that I can see. For example, Okay, for example, over here, if I just scale in, guys, over here, I can see that price came to my key level 1.04500, and then what happens? We see huge bullish engulfing. We see rejection all the way across, right? Let me just draw a level of support, right? It's a horrible level of support, but we're just going to go for it. Where we see that price rejects once, pushes up, right? Break structure over here, comes down, retest the actual level 1.04500. What happens then? Price has hesitated to go up, but then what happens? We see a moving average break and a bullish engulfing. That rings me bells. That goes, okay, wait a minute, I need to find entries. Okay, where do I go? 5 minutes or the 15 minutes. Me personally, if I want to get that sniper entry, I'm going to look on the 15 minutes. So let's just, let me just draw an area over here just to let me know so that I can scale in. Right, I can scale in. So 5 minutes and we just come out. Okay, over here. Right, so I know this is looking crazy. I know that, you know, we missed on all these pips over here. Again, if I really wanted to, I could be really, really aggressive and, you know, have that moving average crossover, you know, price basically retesting around over here, this area. I'm going for it, but that's not really the best entry I can get, because then if I entered over here, for example, let's say I entered over here, my stop loss is going to be all the way down here, right? Now, it's not a low stop loss, but it's a stop loss that we could get a better entry, right? Patience, guys, okay? This is why we scale into the 5 minutes. Why? Because price breaks up, breaks structure, and retest our moving average. Oh, brilliant, right? Retest our moving average. What do we do? Okay, it retests our moving average. And bearing in mind, guys, we're on a 5 minute time frame, so you have to be careful with your stop losses. But we see moving average retest over here, and we can actually enter. Let's say we entered at the end of this candlestick right here. Stop loss below this moving average, okay? Having a 5 pip stop loss, okay? And this is what I love about the 5 minute time frame, is because we can get that sniper entry and we don't need to worry about it hitting our stop loss. If it hits our stop loss, right, we didn't risk as much, right? It's only 5 pips, right? So then we scale out, we'll go back to the 1 hour. Reason why we're going back to the 1 hour is because we need to, why is everything disappeared? We need to understand where our take profit is going to be. Now, I could be very, very hesitant and put my take profit at 1.05, which is plausible, but we know that the market is retracing. We know we had a huge bullish engulfing, right? Huge bullish candlestick. So what we're going to do is we're going to take our profit all the way up to here, right? A 1 to 23 ratio. Obviously, this is, we would obviously stop, if I draw an area right over here, would obviously stop our market right over here. But we have now a 1 to 22 ratio. So can you see, guys, how we've got our targets on the 1 hour, we've got our entry on the 5 minutes, and on the day and 4 hours, it's just our analysis, just where we project where the market is going. We understood that price on the 4 hours, we understood that price is rejected multiple times. We know that price is going to go to our next key level, right? Next key level, i.e. could be 1.05 or the 1.06, right? It could be that, right? Now, if I want to be very conservative, I can just stick to 1.05. But once I see another entry, so you can see clear as day, 1.05 got smashed, retested our moving average. Again, another buying opportunity, right? So this is why I love time frames, because we can actually see this clear as day, so many entry points, okay? Now let's look at the 1.05 over here. Let's look at this area over here. And I actually love Euro USD, because Euro USD, the structure in the market is crazy. So let's look over here, right? Another 1.05 to 1.06. Let's look for entries over here, right? Same procedure, 5 minutes, right? Let's scale out. Let's go over here, right? Same strategy, same thing, okay, guys? Literally the exact same thing, okay? So we scale in. We know that we're looking for price to, we're looking for basically price has rejected multiple times. We're looking for basically price breaking structure, which it did, and then retesting either a moving average or retesting an area, which it did. It broke structure. We had a huge bullish engulfing over here, right? What happens? Bullish engulfing, hesitation, right? No moving average crossover. We already had the crossover over here. All of these candlesticks are not once the moving average crossed over, meaning that it's time for an entry, right? Time for an entry. What do? We enter the market, right? Let's say I enter the market after this bullish engulfing, right? Keeping our stop loss. Again, it won't be as tight, but keeping our stop loss just below the moving average, okay? So let's keep it actually below over here, because sometimes we do have a volatile market. So just below the moving average, right over here, below this candlestick where the rejection happened. We had multiple entries, by the way, multiple entries over here. Okay, then where we go back on the 1 hour because we want to see targets, right? Targets. Where are we targeting? 1.06, right? Let me just go over here. 1.06, right? Targeting. This is also a 1-to-7 ratio. Not as great as the first one, but still a really, really good entry point, right? Really, really good entry point. What happens? Price eventually does come down, you know? Price does get close to our stop loss. If it did stop us out, what we'll do? We'll look for a better entry, right? We would have had a better entry because price then pushed up, retested the moving average, right? We'd scale in, look for entries over here, okay? But what happened at the end? We ended up seeing take profit. Okay, as simple as that, guys. We now have used all the time frames to get to where we want it to go. Okay, so again, just a recap of how we use time frames. Daily in the 4 hours shows us market structure, right? Shows us what's happening in the markets, gives us a story, right? The 1 hour gives us targets, right? It gives us areas where we are interested in, gives us entry areas. For example, over here, we see bullish and gold. A bullish candlestick, bullish candlestick comes down, retest this area. Another point for entry, right? Another point for entry. What does that mean? It means that we can look for entry points, right? We can see entry points here, scaling into the 5 minutes, looking for entry points, targeting all the way up here. Okay. Again, over here, same thing, right? Price goes up, you know, retest. We see a bullish engulfing. What do we do after bullish engulfing? We want to enter the market. What do? We scale into the 5 minutes, and we have a look what happened to the market. We saw that the market, let's just scale in over here. We see that the market, you know, it broke, retested our moving average, same strategy, same thing, just repeat. Yes, sometimes you will hit a loss. Yes, sometimes, you know, these sniper entries, it will take us out. But what will happen is we get to have really, really nice entries. We don't have to risk as much, and we have crazy take profits, right? You can risk, let's say we risk, you know, we're risking 5 pips and we're getting 22. That's 22 times 5, right? So anything that, let's say you risked £1, every pound that you risk, you're getting £22 back. That's 22 trades that you can back to back lose. Let's say we always have a 1-to-22 ratio. I have to lose, right? I have to lose 22 trades to get back to break even, okay? That is a different video though, risk to reward ratio. That is a completely different video, but I hope you lot understood the market. I hope you understand what each time frame is and how you use it. I know I'm moving super crazy. I'm in my bag right now. I can see that the market is I love Euro USD. Euro USD is one of the, it just moves nice and slow and it has such perfect market analysis structure basically. I really, really do like it. But combining all strategies together, the moving average, the time frames, you can find yourself making crazy profits. Okay, it is one of the strategies I've been using for quite a while, and it works. Okay, it works. It's crazy. You can make crazy profits. You can have really good entries. And if you see on my Instagram or when I post, every time I enter the market, I have really little drawdowns. Yes, sometimes the market can give me crazy drawdowns, but when I'm in the market, I'm looking for the smallest drawdown. I'm looking for the best entry, right? If I don't see the best entry, I am not going into the market. Simple as, okay? So I hope you lot enjoyed this video. Make sure you lot subscribe. Make sure you like this video and actually use these concepts together with your strategy. And I promise you, it will change the game. Other than that, guys, I will see you lot in the next trading breakdown or the next trading video. See you lot, guys, later on.